Hello and welcome to this latest Renegade Investor Report with me, Graham Rowan. Now today we're going to touch on a subject that's always kind of one of endless fascination for people and often triggers the politics of envy, but I hope we can approach it from a point of view of learning something that may be useful, helpful in our own financial journey, and just kind of interesting to reflect on really where the world's going at a macro level. Because today I want to study the wealth of the super rich, the very high and ultra high net worths. Where's their wealth come from? What are they investing in? What can we learn from that? So buckle up, it's going to be an interesting ride. As ever, the Renegade Investor Report is brought to you by the Beaufort Society, which is a private members club for high net worth investors around the world, just over 1,000 members at the moment. If you'd like to join them, you can find out more at beaufortsociety.com. And also, I'm delighted to say now that Dee Ludlow and I have officially launched the Crypto Research Institute. And more importantly, we've made available to our subscribers there the Crypto 20 Index of the top performing crypto assets that we believe are going to shoot the lights out during 2022. So if you want to become one of the founder subscribers and see what we're investing in and get all the updates and so on, you can find out more about that and subscribe at crypto20index.com. That's crypto20index.com. Okay, so let's talk about people's wealth. I'm very grateful to an organization called WealthX for a lot of the data I'm going to share with you today. One of the many reports they produce is called the World Ultra Wealth Report 2021. And there's the URL if you want to download a copy for yourself. You just need to pop in your details. The report is free, and then you can download this about 27, 28 pages that I've condensed into the slides I'm going to share with you now. So one diagram that's not in the report, well, I thought would help to just set the scene for really what I want to talk about today, is a kind of a wealth pyramid of the wealthy, if you like. And so here it is, it's on 3 layers, and you qualify officially as high net worth under their measurement rules if your net worth is between $1 and $5 million. And there are, in fact, 25.8 million people who qualify under that categorization. In fact, they're very accurate. It's 25,814,770, and perhaps you are one of them. So why are these videos not getting 25.8 million views would be a question I'd like to ask, but never mind, don't get me started on that. So we've got 25 million, almost half the population of Britain around the world who have are millionaires, if you like, in the definition of that. Now, I know millionaires ain't what they used to be and all that, but $1 to $5 million, and in total, their wealth is worth, the figure on the left there, 42.7 trillion. Now, trillion's a figure we've kind of got used to in the last 18 months during banana syndrome, as governments get more and more indebted and turn up those printing presses to warp factor 12. But there are multi-trillion-dollar markets around the world in things like stocks and shares, real estate, the biggest of all things like Forex. So it's hardly surprising that if you're looking at the wealthiest people in the world and adding up all of their net worth, then you are measuring it in the trillions. But what's really interesting about this, I think, is how quickly the numbers decline as you move up that pyramid. And it's a reflection of almost every aspect of life, really. So only just over 10% make it to the next layer up, the very high net worths. And they have between $5 and $30 million net worths. And because there are so fewer of them, their total net worth is less than the high net worths below, because obviously there's only 10% as many people. They still between them have 27.1 trillion. So, they're not on their uppers. They know where the next meal's coming from. But there are only 2.7 million of those. And then once again, it's almost mathematical in its accuracy. You can take another 0 off the end, and then you get to the ultra high net worth population, for which you need a net worth of over 30 million. And for them, there are just 295,450, but their net worth totals 35.5 trillion. So clearly, as you go up the chain, the numbers of people involved decline enormously. So when you hear the term ultra high net worth bandied around, you're talking about the population of a big town or a small city. You're not talking about gazillions of people. And this is where I think some of the progressives, shall we say, on the left of politics really don't do the maths, because there's obviously all sorts of pressure now about billionaire taxes and taxing unrealized capital gains, and how can we get everyone to pay their fair share. The point is, there's so few of them. If you tax them at 100%, it would go nowhere in terms of paying down the debts of the world's leading countries and economies. There simply aren't enough people to make this worthwhile. It would be purely political. It would be a gesture. It would be to placate the masses. But that is the way politics is going, clearly. So if you are in any of these categories, I think you should be very worried about being the victim of political gestures in the next 12 to 18 months, as leaders are seen to do something about the inequality that they themselves have actually brought about, as we'll talk about in a little while. What's really entertaining is, this is a little bit like, the oligarchs with their London mansions, or the size of yachts in the harbour at Monaco. There's always, no matter how wealthy you are, there's always somebody wealthier. There's always a bigger number. So let's have a look at one of the most enlightening diagrams within the WealthX report. So the top 1.2% of ultra high net worths own 34% of the net worth of the high net worths, if you see what I mean. So if you look at everything on that previous pyramid, a third of it belongs to the top 1.2%. These are the billionaires. The very high net worths own just over a quarter of it. The high net worths, obviously because there's so many of them, own 42% of it. But what's interesting is these ratios have remained virtually identical since WealthX started collecting these numbers back in 2004. So there's almost 2 decades worth of data, but these things aren't changing. And this really ties in with a lot of kind of pyramid structures or hierarchies in the world, that you're always going to get this, the top 1%, then 4 or 5% beneath them who are doing okay, 20% doing well, a lot of people that are getting by, and a few that are really broke and struggling. And that kind of structure is mirrored almost identically among the wealthy. The number of billionaires has even remained the same, although they have, contrary to the rest of the people in this pyramid, they have actually increased their wealth significantly in that period. So the old adage about the rich getting richer, it's kind of true, but only at the very top of the pyramid. And as you'll see in a moment, it's varied enormously by region and country. So it's very hard to generalize on this, because some have actually had a tough time in the last 12 or 18 months for reasons that will become apparent. But this is the chart I was talking about in terms of levels within levels. So everyone on here is already ultra high net worth. So the entry ticket to this pyramid here is $30 million. And what you can see, slightly hard to read, so let me try and explain. So on the left-hand side are the number of people. So there are 141,630 at the lower end of the ultra high net worth, which, as you see in the little box on the right there, the wealth tier key is 30 to 50 million. So if you've only got a mere 50 million to your name, you have 141,629 peers in that bottom sector of the ultra high net worth pyramid. Next level up is 50 to 100 million, of which you have 90,000 people. 100 to 250, that comes us down to less than 44,000. $250 million to $500 million, that's now 11,000, just under 12. Then $500 million to $1 billion, you've got 5,000. And then in the billionaire category, you've got 2,792. Then the figures on the right of that pyramid in the background is the total kind of wealth in each of those areas. So 2,792 billionaires have 9.5 or 9,500 billion dollars of wealth. So, that's kind of, as you can see, the slightly disproportionate top of the pyramid, and they're the ones that have done the best in the last 15 to 20 years, while the rest have actually stayed relatively static within each of those categories. So 295,000 of these very high, ultra high net worths, 35.5 billion in total wealth. Sorry, 35,000 billion, so that'll be trillion. How's it work globally? Let's do this in two halves because I couldn't fit them all on one slide. North America doing very well. In 2020, its population of ultra high net worth went up 6.9% and their wealth went up 7.1%. I think the reasons for that are fairly obvious if you're watching the markets at all during 2020. However, very different story in South America. Latin America and the Caribbean down 23.5% in terms of the number of people in this category, and about the same in terms of the level of their wealth. So in other words, 860 billion is what they're worth, but that's gone down 22.9% in a year. And again, all down to local country and market conditions and to local politics. Africa actually has come out of this remarkably well, considering, but it is and remains the smallest group of ultra high net worths. They just declined by 1.5%, and their wealth actually stayed pretty much the same. So they escaped banana syndrome without really too much harm. But unlike America, they did not make significant gains during 2020. Coming across to Europe, and again, Europe did not do well. I think because of all the excessive politics and lockdowns, the economic impact of what politicians did in Europe was very high, very damaging. And so the number of ultra high net worths declined by nearly 5% and their wealth by 4%. Middle East didn't do well at all either. We'll go into the reasons for that in a moment, both in numbers and wealth, significant decline. Big rise in Asia, second only to America, up 5.2% numerically and 5.2% in their wealth, while the Pacific, again, i.e. Australia, fairly small, down 3.9% in numbers and 2.5% in wealth. So as you can see, you've got anything from plus 6 and a bit percent to minus 23%, depending on where in the world you were in 2020. So even as an ultra high net worth, that level of difference, that level of, I suppose you could call it volatility, I think is quite surprising and just shows, I think, in many respects, the regional impact of banana syndrome. And in case you wonder why I keep using that expression, it's just because I'm trying to avoid being deplatformed, and the algorithms have ears, I'm afraid. So, you need to be very careful what you say, free speech being a thing of the past. So the report shows, obviously, I think based on these kind of numbers, a warning on wealth equality. If I quote from it, the extent to which the ultra wealthy were able to weather the storm, and in some cases significantly expand their fortunes, in one sense augurs well for the future wealth creation prospects. However, it will also raise more questions over widening wealth inequality and could spur more concerted redistributive policy efforts in areas such as tax and regulation. Quelle surprise. So, they are obviously going to be coming after anyone who's vaguely classed as wealthy. And these days, I would argue that $1 million is not wealthy. You try buying a pension with $1 million, translating that into sterling, what's that, about 750,000? You'd be lucky to get a living pension if you bought an annuity with that in 2021. So, to call people like that wealthy is really, only in a politician's head could that be justified. Now, there's a separate report produced by an organization called the World Inequality Council, I think. Now, obviously, if you're called the World Inequality whatever, the chances are you're going to have pretty firm views on inequality, and you're probably going to come from somewhere left of the political center, and that is no doubt reflected in their report. But there are some useful facts and a check and balance on the WealthX report. So they're reporting that across the world, and again, averages are so difficult with such regional variations, but they're saying the average adult earns 16,700 euros. This is a European organization per year in 2021, and their average net worth is 72,900 euros. If you're from the top 10% of global income distribution, then on average you earned 87,200 euros. So that's kind of, I would imagine, true in most Western economies. You're certainly in the upper quartile at that level. I think certainly in the UK or America, I think you'd need to be higher than that to be in the top 10%, but you'll certainly be in the top 20, 25%. And of course, the poorest half of the global income distribution, the average incomes are as low as 2,800. Now, that's still way, way better than it was 20, 30, 40, 50 years ago, but that gets quietly forgotten. It used to be like $1 a day was a measure of poverty, and there's so many millions have been moved out of poverty in recent decades, but obviously there's still further to go. The poorest half of the global population only owns 2% of global wealth. And again, that's not a figure that's particularly edifying. The question, of course, becomes how you address this. I've always felt that the productivity and capitalism and free markets are what drives making everyone a lot wealthier. It's even worked in China until very recently. They've had 40 years of massive growth in wealth. They've taken, I think, 600 or 700 million people out of poverty, because now they're going to head back that way under the new rediscovered, shall we say, communist principles in China. Common prosperity. When a government talks about common prosperity, that means everybody's going to be broke. So that's the new policy in China. It'd be interesting to see how long that takes to be seen to come true. And the richest 10% own 76% of all the wealth. So, those kind of stats have kind of been around for a while, so you may not be surprised by them. It's always useful just to be reminded of them, particularly in the context of what we're looking at from the better off members of global society. But equally, knowing where the differences exist, Europe being the most equal, and Middle East and Africa the least equal. I guess they have some quite hierarchical and tribal histories and things there. And if you own the oil, obviously you're going to be doing very well. If you own some of the minerals in Africa, ditto. Europe has more equality. America obviously has tended to be more extremes in society, and we see that in their politics, we see that in their elections. But yeah, so at the moment, Europe's the most equal, but there's no real surprise that Thomas Piketty is one of the people involved in this. Again, very much a left-leaning economist. And this is what the report says, that to help redress this imbalance, they're calling for a modest, progressive wealth tax on global multi-millionaires in order to redistribute wealth, and tougher action on tax evasion. Given the large volume of wealth concentration, modest progressive taxes can generate significant revenues for governments, the report said. Well, you've got 200,000 people to go at. Maybe, you've got a few more, couple of million if you want to take that lower level of wealth. But of course, progressive taxes never stay modest, and they never stay, well, they do stay progressive in the sense that they progressively get higher and higher, and then through fiscal drag and all the rest of it, more and more people get sucked into it. So yeah, we'll now have nurses and school teachers as higher rate taxpayers in the UK, thanks to Rishi Sunak freezing the allowances for 5 years. It's less painful than announcing a tax rise, but it's still, robbing from people who are what you might call aspirational middle class, and really, sending a very bad message, I think, to them. But of course, here we're saying, oh, it's those idle rich, isn't it? Let's go after them. Let's solve all of our problems by getting them to pay their fair share. I wish it was that easy. I really do. And one or two high-profile billionaires will say, yeah, I'm happy to pay more tax. Well, okay, fine. It looks good on social media. But, they've already got massive amounts of, tax structuring and planning in place. And it's almost a form of philanthropy for them to offer some further taxes. But the problem is this mindset that the wealthy need to pay more will permeate across all aspects of the political spectrum. Certainly in Britain now, there is no political party that was even remotely interested in helping wealthy people. In America, possibly the Republicans, although they've got such a left-wing democratic government now that anyone that comes in even looking fairly moderate and centrist, or like a social democratic party in Europe, is going to look right-wing in comparison. So it's hard to know where that'll go. But ultimately, there's going to be some gesture politics, taxing the rich. It will not solve all the problems, guarantee that. The central banks have really painted themselves into a corner where I think they're just going to have to start giving money to people permanently through, UBI or whatever you want to call it. Obviously, last year, the global economy took a hit. The blue line is GDP because of banana syndrome, and because of the political response to banana syndrome, which is looking increasingly useless, to be fair, when so many people who've taken all their medicine can still get the syndrome and can still spread the syndrome. It does make you wonder exactly what's been achieved. But better brains than me will have to analyze that. But my feeling is getting increasingly cynical by the day. The orange line is the growth of the ultra wealthy population, which has continued basically on its steady path. It's not exactly zooming up there, is it? It's steadily trickling up over the last 5 or 6 years, but it has avoided the main impact of the GDP from last year. Although, as I said, regionally, these are averages. Regionally, and these are numbers of people, there have been big declines in some areas. I think this is quite a key slide in the report, because it talks about what factors actually influence wealth, and obviously a lot of it's to do with things like government and central bank policy in your country, and also what their tax approach has been, what the strength of the infrastructure is, how much technology is going on. So one of the reasons behind America doing so well last year is so many of its companies are technology based. One of the reasons for Europe doing so badly last year is that so few of its companies are technology based. And of course, the big growth areas during the pandemic were things like Zoom, things like Microsoft Teams, anything that involved all that kind of stuff, and Netflix streaming, anything that was technology that was working from home, that all did really well. Whereas all the sort of traditional financial institutions or any countries relying on tourism or things like that, or commodities, where commodity prices tanked, the oil price tanked, hence the Middle East. So all these factors at a macro level play a part in the ability of individual citizens to either accumulate or retain their wealth. And that's what the report is saying here. What it's light on at this stage, although it does mention it later on, is money printing, because obviously these people were already somewhat wealthy, which meant that they owned assets. And the more you print money, the more you debase the currency, the more of that currency you need to buy the same amount of assets. So the prices appear to go up. And if your property went up 15%, and suddenly you think, oh, I've made 150,000 on my $1 million property. No, you haven't. You've just kept up with the increase in the supply of currency. Another way of looking at it is the increase in the central bank balance sheet, if you like, because they print all this money and their balance sheet's doing that. If your assets didn't go up by that much, you would actually be losing wealth. So the minimum you need to do is to match the increase in the growth of the central bank balance sheet. And if your assets are producing less than that, you are getting poorer every day. It's not quite the same as inflation and price rises where there's a supply shortage of, chips or petrol or bananas. That does cause some price increases. But the thing that causes the assets of the wealthy and therefore their apparent net worth to go up is things like money printing combined with record low interest rates. So, when you look at all of that, these are driving the growth in wealth of the ultra wealthy, as well as GDP and also local currency. The countries that have really suffered last year have had weaker currencies. The US dollar is the world's reserve currency. I think it's almost 70% of global trade involves the US dollar at some point. So other currencies have weakened against that. So if you measure your wealth in dollars, but your local currency has gone down 20%, then your wealth will have gone down 20%. These are the kind of factors that are influencing these numbers. Obviously, we had banana syndrome last year, big GDP contraction. Yes, the whole idea of globalization came under threat, didn't it? Suddenly it's like, hold on a minute, this supply chain doesn't work anymore. And I don't want you to have this medicine. I want it all for my people. So, let's not coordinate any kind of response to this globally. Let's behave pretty much the same as we do on climate change. We'll each do our own thing, and the hell with what happens globally. That's kind of what happened. That didn't help global trade and continues to not do so. And also, negative interest rates, which have been around for a very long time. So these are some of the factors that are helping to either make you wealthier or less wealthy, depending on where you live, what your money is tied up in, and the politics of the country and the environment you're operating within. So these regional variations, let's just touch on some of those. America saw the biggest growth of all, nearly 7%, and they've now got 38% of all the ultra high net worths on the planet. This was driven by the equity markets and good old Jerome Powell. Asia increased the second highest thanks to strong markets and also very tight controls out there. I mean, some of what they did made the West look even moderate for a while. Although now, the kind of apartheid that's going on is becoming quite appalling, and the impact on civil liberties is just beggars belief. We are definitely heading back to the 1930s. In Europe, the ultra high net worth population fell by nearly 5%, thanks to their responses to and the very kind of haphazard responses, and just almost designed to incur the massive biggest amount of pain on business, especially on tourism and the leisure sector and so on. In the Middle East, obviously driven mainly by the oil price and to some extent by tourism, big decline of 6.4%. Biggest of all, 22.9% drop in the Caribbean, partly to do with very poor stock market performance, partly because commodities on which some of those countries are very highly dependent are tanked in a lot of cases. And of course, they had very weak currencies compared to the US dollar. So combine all of that, it was a bad year to be wealthy in Latin America. And out there in the Pacific, again, they were totalitarian in their lockdowns, wouldn't even let their own citizens back in. I thought Australia was a sort of free and easy kind of country, a bit almost like California in the East. Boy, oh boy, did they show their true colors during the banana syndrome. Who'd want to go and live there? My goodness. And Africa did not too badly, although it is the smallest of the ultra high net worth population. So, that's how things have been going on globally. The top 10 countries by ultra high net worth population are here. The US, not surprisingly, at the top, over 100,000 of them, and that figure itself up 8% in 2020. China second, again up 8%, but look, only 30,000. Japan, still very, very strong there in third with over 21,000 ultra high net worths. Germany fourth, Canada fifth, France sixth. There was a big decline last year, 10.8%. Hong Kong seventh. Those that are still staying there are not fleeing the new measures. The UK hangs in there in eighth place, albeit with a 9.5% decline in last year, Switzerland 9th, and India 10th. So, India, a lot of people's sort of tip for the top in terms of the future with a young population. China has almost as much of a demographic issue as the West, and now is also moving, looking inwards, moving away from the capitalism that's caused all its wealth to grow in the last 40 years. So I'd imagine the number of wealthy Chinese will decline markedly in the coming years. India, on the other hand, is gradually tackling its bureaucracy and its other issues, and we should see that young, highly educated, highly intelligent population very successful in business. A lot of them seem to end up as CEOs in Silicon Valley for some reason. So I think we'll see a lot more high net worths in India. That will come up the charts as the years go by. But that's your current top of the pops, top 10 of ultra high net worth countries. What about cities? This is slightly different. So New York is top with 11,500-ish, and again, up 8% last year. Hong Kong down a bit. Now, Asia generally did very well. So I wonder if that's the beginning of the exodus showing in the Hong Kong numbers there. Because if you've got the money, you've got the choices. And why would you want to stay in a place where you can be arrested on the whim and charged with some trumped up corruption or tax fraud charge and stuck in a Beijing prison for the rest of your life? So I'd imagine a lot more wealthy people will be leaving Hong Kong. Tokyo, again, very strong. Los Angeles, Chicago, huge performance. San Francisco, of course, we're getting across there to Silicon Valley now. Paris, down quite a bit, but still in the top 10. Washington, up a lot, 12% nearly. In fact, probably best of all, isn't it? Yeah, that shows that a bit of government lobbying obviously helps the coffers. And Osaka up to number 9 there, and Dallas, again, a very good performance at 11.6%. So that's your top 10 cities. Some of the things that are interesting there: China and Germany don't have a city that features in that top 10. So, somehow their wealth must be just much more distributed around the country. Paris is surprisingly now the leading European city for ultra high net worths. London was 7th last year, but it's gone down to 12th now. So, the bad performance in the banana syndrome has really impacted the number of high net worths living in London, and has declined significantly. But actually, the population density tends to center more on smaller cities where you've either got a lot of technology stuff going on or a very strong financial services center. So if you look at the top 10 cities by population density, let me just explain what this means. If you see, the orange line is the ultra high net worths, and the sort of dark blue gray line is the very high net worths. So what this means is that there's one very high net worth for every 66 residents of San Jose, California, and there's one ultra high net worth for every 727 people who live there. And that's the highest population density in the world, thanks obviously to the location next to Silicon Valley. So that one, hardly a surprise. Next comes little Basel in Switzerland. All those gnomes of Zurich and Basel doing very well there. So you've got one very high net worth for just over 100 people, and an ultra high net worth for 776 people. Hong Kong 3rd, and then Geneva and Zurich. So you've got 3 Swiss cities in the top 1, 2, 3, 4, 5 there. Then you've got San Francisco, of course, back to Silicon Valley. Seattle, well, it's kind of on the West Coast, so I guess it's got a bit of, obviously Bill Gates, I guess, is still there. He probably accounts for most of that personally, him and his top employees. Boston, again, a big wealth center in America. Bridgeport, and New York. So yeah, interesting. See, New York top of the other table, but only just scrapes into the top 10 by population density. So interesting analysis. Not sure what you can make of that or do with that, but if you want to find a lot of wealthy people, you either need to head to California or Switzerland, I think would be my message from that. So what do these people do with their money? How do they allocate their wealth? Well, this is how the numbers look across the whole of the ultra high net worth. Remember, this is $30 million and upwards to get into this little club. And what they have is 38.4% in liquid assets, which is either cash or income or dividends. Quite a high percentage liquid. They only have 5.4% in real estate and luxury assets, by which I mean, probably Rolls Royces and things like that. But look at the biggest holding, apart from the liquid stuff, 32.4% in private holdings, private equities, equity in their own companies, and then 23.8%, that would be in stocks and shares, in the bond markets, precious metals, cryptos, whatever else. So private holdings, and the cryptos actually would probably class more as private holdings, wouldn't they? So a third of their wealth is tied up. I think mainly, if you dig below the surface here, this is in shares in their own companies that they have grown to be phenomenally valuable. This is why the left wing in America want to tax successful entrepreneurs who hold on to shares in their own business. They want to tax unrealized gains. Now, it's been thrown out, but it's just the very fact they're having these thoughts and these proposals tells you the direction of travel. That idea hasn't gone away. It's going to come back in some way or form. So a third of the wealth on average across all the ultra high net worths in the world is mainly, I think, held in their own companies or money they've invested privately in other pre-IPO non-public companies. That's where a lot of the world's wealth is being created. It's why I know, Beaufort Society focuses on some of these privately held companies with the biggest growth potential. And if you can get in at the early stage in those companies, you can see life-changing returns as they eventually go scale and go public. Occasionally it'll be a trade sale. There's been some of these SPAC things, but I think they probably had their day now. I think people are starting to see through that structure. But real solid privately held companies are a great place to grow wealth, and the wealthy know that. That's why they've got the biggest single holding of anything, and it's 7 times what they're holding in real estate, which might surprise a few people. Everyone seems to think that people make their money in business and then spend it all on property. The figures suggest different. They hold a large part of that equity, even when they've got all the wealth they could possibly want. They put some of it into public shares and bonds and things. They keep a lot of powder dry in terms of liquid assets, which they can do something with, perhaps snapping up bargains if they see them, if a crash came in the stock market, or buying a competitor through some mergers and acquisitions activity. They like to have some dry powder to deal with, and they put some of it into real estate. What about from an age perspective? Because there's a common perception that the older people, the baby boomers of my generation, are the ones that have got all the money. Well, in 2020, it was actually the under 50s, the millennials, that had the best success of all. I would think because they're still creating wealth in their businesses rather than relying on investments to increase their wealth. And because investments had such a patchy year, you are probably less likely to do well as an older, perhaps retired person than if you're still creating wealth, you're comfortable with technology companies, you perhaps got more of your wealth in the S&P or the NASDAQ. Those are the people that really did well last year. And I think that's what's reflected in these numbers. So there was an overall 2% rise in the ultra high net worth wealth last year, which is not exactly sensational, but the majority of that accrued to the under 50s. 0.5, a quarter of it went to the 50 to 70 age group, and just 0.3 to the over 70s. Although in terms of actual wealth held and total net worth, generally you'll still see the older you are, generally the higher that net worth figure tends to be. This is a really interesting one as we come towards the final stage of this analysis. Again, a lot of people like to think about, born with a silver spoon, had it easy, inherited it all, haven't had to work a day in your life. You hear all this sort of stuff. Look at that. 72.5% of ultra high net worth people around the world are self-made. 3/4 of them have done it all on their own sum, without help from mum and dad, without handouts, without anything else. And that number, that proportion has gone up in the 4 years that are shown here. The blue line is 2016, the orange is 2020. So more than ever, these ultra high net worths have made the wealth themselves, predominantly, obviously, through growing their business. They've got 1/3 of their wealth in these businesses. That's where the wealth's come from, versus 20% that have either, got some permutation of inherited and self-made, and just 7.4% who have inherited it. So, less than 1 in 10 of the ultra high net worths are there because of inheritance. 1 in 5 have had some mix of inheriting something, perhaps taking the family business on to the next level, but the vast majority have done it all themselves. And I rest my case, my lord. These are the people that are the wealth creators. And these are the people, ultimately the only people, that can make a material difference to the state of a nation's economy if they are allowed to do so. And the problem is, more and more, through a combination of regulation and tax, they're not going to be allowed to do so, which leaves only central bank money printing and universal basic income as the source of wages for the people that would otherwise work in these successful businesses. So my thoughts and conclusions. It was a very mixed year for the wealthy, enormous regional differences from +7 or 8% to -23%, depending on where you were in the world. And that's something which you have some control over. And one of the things that obviously has come out of the whole of the last 18 months is you should be asking yourself if you still want to be where you spent the last 18 months. Is that a country you want to live in? Is that the treatment from a government that you expect, or is it time to look for pastures new? Certainly, I think there's plenty of food for thought in the last 18 months. Most of this wealth comes from financial and real estate markets and technology markets that have boomed through this QE and currency debasement. So a lot of the increase in wealth is actually because they already held assets. There's been a lot more currency printed, and therefore you need to have more pounds, dollars, or euros to buy the same amount of shares, real estate, cryptos, cars, whatever. So really, all you've done in many cases is keep up with that currency debasement, even though you might feel wealthier in real terms. If you look at the central bank balance sheets, you've really only kept up with what they're doing. As I say, 3/4 of these people are self-made, predominantly in areas like technology, finance, and real estate. They've achieved their own level of success. They have very, very few who have inherited this wealth. However, there's going to be a lot of political pressure for increased taxes. It's growing all the time. The reality is there are so few of these people that I can't see how any level of tax is going to make a material difference to the level of debt, the level of commitments, the level of promises being made by politicians. They're impossible to fund. The debt is never going to be repaid. So we are in this vicious cycle that just seems like it's going to continue on and on into the future, with no end in sight, because politicians and central bankers have painted themselves into this corner where there's no way out. And it's their policies right since the financial crisis that have caused most of this. The rich guys have not really done anything wrong. They've just tried to grow wealth and grow their businesses. Now, they're going to perhaps be portrayed as the villains of all this, when in reality, of course, the average person in the street is clueless about this, but it's really the policies from the central banks and the politicians working in unison that have caused the situation we now find ourselves in, that have driven the wealth inequality that is now being perceived as somehow a problem caused by the people at the upper end of that spectrum, and that they therefore somehow have to pay the price for it. Well, it ain't going to work. So it'll be interesting to see how this all plays out during the 2020s. But that's the kind of background, that's the scene setting, that's where we are. So all I can say is, if you are high net worth, very high net worth, or ultra high net worth, get ready for the shakedown, because boy, are they coming after you. Thanks very much for watching, and I hope you'll join me again very soon. Great to see you on Renegade Investor Report. Bye for now.